Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, September 18th, 2019. I am Frank Ochoa, aka PivotBoss. Happy Fed Day. We have the FOMC statement and Fed interest rate decision later on this afternoon at 1 o'clock Central, 2 o'clock Eastern. That's going to be very important. That's why the market's really tightly coiled here as we head into that event. Very, very quiet price action over the last 5 days ahead of it. The ES trading just 8.5 points of range right now. That's 32% of normal, and normal has dropped down now to just 26.5 points over the last 10 days. So a very different market here than it was in August and even heading into the beginning of August there with the FOMC. So the last time we got an FOMC key level was on July 31st here. It was that day the market sold off, and then the next session price rallied tremendously, retested the level, and then sold off just as hard on Trump tweets. Now we've come all the way back to that level and retested now, and we're sitting right back at that zone with another 5-day narrow range that's developing. Again, that's usually indicative of compression that will likely lead to expansion soon. And so right now we have this upper key level here of the key range, and price is sitting right at it. Again, this could go either way, but 2 of the last 3 times we've had the Fed, we've had a couple of different things that have happened. If you look back at May here, you can see as soon as that FOMC level came out, it sold off, just like it did this time. FOMC level came out, it sold off. Then price bounces back to the level, and at that time you see selling pressure right at that level. So it bounces right back to there, hard selling. Then the next day we bounce back to the level right there, and then hard selling. So that's 2 of the last 3 times. The other time was right here where the FOMC key level actually held the rest of the day and went bid 2 days later. The retest was then defended and a continuation. That's the standard FOMC key level play. So again, it's going to be very interesting here to see how price is going to respond this time around. Again, if we get selling pressure, that's pretty tremendous. Any pullback could be a selling opportunity for a continuation back toward 2880 and perhaps even 2800. That's been about where we've dropped each of the last couple of times. So again, that could be something that comes to fruition here. So we'll have to see how it plays out later on this afternoon and into tomorrow, but it is clear that volatility will likely be released after this number comes out, or if they decide to change or not. All right, let's take a look now at the NQ. A little bit of a long-winded intro there for the ES, but this is similar price action for the NQ right now. FOMC key level last time was here, price sold off, the retest the next day, and then dropped tremendously. Very similar to what happened in May, sell off, retest, and then drop tremendously. Now the other thing that had in common was not only was the market reacting to the Fed statement and the interest rate decision, but these drops here occurred on Trump tweets, both of them. And so that right there led to weakness, and so did this. Do we see that again? Are we going to get that pattern again where we see the Fed statement and the Fed interest rate decision followed by a Trump tweet that does something to the market? So again, we will keep that in mind here, but right now, again, all eyes waiting on the Fed later on this afternoon. Just a 30% range right now, 30 handles in the NQ. If we take a look at crude oil, this one has had a couple of very volatile sessions, again with the Saudi oil news, and we got the big gap up that day, drop and rally. This time around we sold off and took out the low and bounced and then dropped back down. Now we are below that 5850 level that I've mentioned before. 5850 I mentioned was very, very important. It was the FOMC key level here from July 31st. The retest was here both times, turning down off that level. And then this time around price gaps up and then holds it here and bounces. So again, I mentioned before, if it breaks back below that zone, it would open up the potential for a gap fill down below. So again, is this market going to gap down? Again, extraordinary circumstances here. but a big rejection at the previous FOMC key level from May 1st. There's the sell-off, there's the retest, there's another retest, and then right there, right on the dot, it got it and turned down off that level. So again, quite a bit of weakness here, and below 58.50 could open up more weakness ahead. All right, let's take a look now at gold futures. You'll see here with gold, it's been in a pullback phase. It has a very clear uptrending channel right now, or uptrend line, however you want to draw this out, and it's clearly on the pullback phase of that. We have compression at the lower edge of the range here. If you look at the last 3-4 days, very compressed, 5 days even. That right there is building energy, especially even if you look on a 5-10 day basis, building energy, and that energy can be released in either direction. Right now, holding above 1480, 1490 would suggest that this thing has more upside coming ahead. Again, if this is able to get above 1520, that could be an early indication of strength to come. Right now we're at 1511. And so again, this thing is building energy at the bottom end on the pullback phase of a bullish channel. We may see the next rally ahead, but a failure to hold 1490, 1480 would open up a return back toward 1400 to 1420. All right, that is it for now. We'll see how this plays out heading into the Fed later on this afternoon. Good luck, trade well, and I'll see you in the trading room. Take care.